Okay, sound and video check. How am I doing, guys? I know we're early. That's intentional. Sound and video, is that what that yes is for, Steve? Cool, thank you. Okay. The reason I opened up early is because I want to catch the quote unquote pit open for oil, guys. So that's what I'm doing. It opens right at 6. That was the old pit open. So there's sometimes some action in oil when that goes on. So I just thought it would be fun. And then I'll actually start after that. So what am I watching when I watch this? Pretty much looking at the context of oil on the 5-minute. It's got what's called a double distribution. Sometimes traders call that a double D because it looks like exactly that. If you think metaphorically. This kind of behavior in oil, and if you look at we're right in the middle of that too, and the POC is right there. So I don't expect anything real exciting to happen, but that's how I get my context for the situation. I don't spend a lot of energy on the range context for oil because it doesn't respect ranges. The opening 5 and the first hour high and low can be inflection points, but oil tends to just get a mind of its own, as you can see. That's why it's such a great trading vehicle, but it's also really a hard one. This is not for rookies. It's just, it moves too fast, among other reasons. So anyway, once you have that information, then the 10-tick chart, and I'll throw this over the indexes for the moment since we're watching that. So what I really am looking for at this oil open is I want to see the interaction between the equities, primarily the ES, gold, and oil. And then I want to see right when oil opens if there's any kind of bias. So it'll do that in 4 minutes, and obviously it's trading ready. So quote unquote open just means the old pit open. I hope everybody understands that. If you're just coming in, I'm just babbling until we see oil open, and then I'll start the formal session about trading the open and prepping. There is no deck for this session. Those of you that are not native English speakers, I will try to speak a little slower. I usually do this time of the morning. I know I can talk very fast. I try to balance that. That's also where my energy comes from. So if I talk too slow, I fall asleep. All right, I'm just killing time for 4 minutes. So if you have any questions, shout them out in the type chat. If you're just coming in, we're just babbling until oil officially pit opens at 6 a.m. my time. And we're watching it do very little. Here is, again, a really good example of how the LRCs are useful for kind of seeing the ranges. Really tight. Right now, the short and the fast LRC are both exactly the same spots. You couldn't get much more sideways than that. A little bit of an up bias. Buying and selling is pretty even. I run a cumulative delta here. It's tiny bit to the upside, but not by much. So nothing to really see here. Gold is in a very interesting position. It's been doing a lot of really, these are huge, six points in gold. You could make a lot of money just trading this little range if it respects it. So that's something to watch today. I generally don't play gold this time of day. I'm usually thinking about the indexes. But this is an interesting setup developing over here. If it pushes down to the bottom of this range, it might become an interesting buy. But remember, if you were in the other session, what I said about it not liking to be in the teens, it tends to leave them and go back down into the 09 area. I don't know why that is, but I've noticed it. One point to remember about oil and gold versus trading the indexes is that these are actual commodities. There is a thing, oil, crude oil, trading by the barrel, and gold bullion. So the difference is, there's a lot of mechanical financial players in the ES, but there isn't really a thing underneath there. But think about it with oil. Let's say you're American Airlines and, you need to hedge your fuel costs for jet fuel for the holidays. you could be buying oil futures right now. And that has nothing to do with the technical behavior of the market. You know, you're trying to protect yourself from having to pay $60 for oil next month. That's what you're doing. So think about it. You know, from your point of view, the difference between 56.77 and even 57.77 is nothing, because you're buying hundreds of thousands of barrels for this fleet of airplanes. So that's why you see oil, you know, do moves like this, where, you know, it'll just go, you know, it's a combination of both speculators and those fundamental players hedging themselves. And there's a lot of that in oil. You know, the refiners do it, the airlines do it, the trains do it. I mean, the ship lines do it. So, you know, if you think about it, that adds another element here. And that's, again, all the more reason why creating strategies and backtesting them is completely useless. Yes, you may quote me on that. Creating and using back strategies for, there we go, we're opening, is useless. You may quote me on that, and I will argue that with any intelligent argument. Okay, so this used to be really eventful, as I said, 6 a.m., you know, all the oil players, the pit would open, it would get crazy. Oh, remember I was saying, you know, we have a buy bias that's pretty clear, but boy, I don't know if I'd be trying to trade this long. Maybe we'll scalp it a little bit here and see what. Again, if you're just coming in, this is not the open session. I started early so we could watch oil here, because oil, the old pit time for oil opening was 6 a.m., which just happened. So I'm just kind of watching it. There's not enough energy in either direction here to try to scalp it. And notice how gold's continuing down out of that range like we were talking about. You know, this is gold right now on its fast tick LRC chart. I don't know that I would short it, but remember what I was saying about it liking to leave the teens. Don't know why that is, but it does. And if we go over to the indexes, you know, it's continuing to churn and build nodes. So we built a new one up here. We've got the one from earlier this morning. And remember, you know, we were watching that guy buying right here in that little pre-session I did. So, you know, that if I wasn't talking to you and I'd seen that, I probably would have just nibbled one long there, and that would have been a nice trade. So that's the kind of thing you were looking at. Remember, we saw that go by on the tape, and, you know, it was probably the beginning of those guys trying to see which way they could push it. All right, now you see gold's picking up some momentum. You see when the tape starts moving real fast and boom, there it's going down to the sell side. Okay, remember I said I was thinking about short? Well, that's why. And I'll just bring this over here so we can watch it. Wow, somebody really big is selling here. And he may, when he finishes, that might be it. So you don't just automatically jump in on these things. But right now it's a long again. See the buyers coming in there? I'm gonna just reset the current and leave the total. You see what's going on? You can really see the battle unfolding. Look at all that selling. Those are all trades going by on the bid, which is not buying, contrary to conventional wisdom. It is selling when it's like that. Starting to build an inflection point right there. If it holds, it might be a good little long pop right there. See it? You can see the volume. That's why I reset the currents and I let that node build itself. It's instant footprint chart. So this is why I don't use footprints, guys. I don't need them. These are exactly the same thing, only I can build it to order as I need it. So see what's happening here? I can see a node that built right there. So now that's gonna kind of act like quote unquote resistance. If we get through there, we'll probably end up at least back at the POC or maybe even retest the highs. Remember, oil likes to do this. Look at all that selling energy getting absorbed now. This would be a good place to use that term, somber absorption, because there was some really heavy selling down to this point. But look at that. See, it is getting energy on the buy side now. Now, that doesn't mean it's a long, but it's just, you know, a pause in that big whiff of selling we saw. And if you look at that on the 30-second interval, it looks like that. So this huge, that's why a 1 minute chart's completely useless. I said that last night in the Slack. It's just, there's too much happens in a minute. You know, even 30 seconds isn't enough. It's too slow. So you really have to learn to interpret that in these little mini ranges. It's one of the reasons I like Jigsaw so much. This is a really cool little ability to build these little footprints. And yes, there's other platforms that do similar things. I'm not here debating platforms. Okay, so that's enough on oil. It was a good opportunity to show that. Maybe if we see it setting up later, we'll jump in. I'm going to put this back over here. Remember, I can still see that. I know you guys can't, but if you haven't seen my, is that an up thrust? No, I don't know that I'd call that an up thrust. On the 5 minute over here, the up thrust would have been that right there, or this pulse right here. But if you really want to see an example of an up thrust charted, Sommer, if you take this down to 15 seconds, then you'll see it. Okay, so God, can't even see it really well on that. This is the problem with using time charts. And 1 minute, completely useless. Once again, you really can't even see it. It was like right there. So it's just too fast. So that's, again, why footprints on 1 minute and longer charts. On a 5 minute chart, you can see, the collective activity. But on 1 minute, I'm going to argue with everybody using them that by the time it shows up there, it already happened, guys. You're late. Okay, so there we go. So remember that node we were watching? It turns out that node became a really strong area to get long. So that's how you watch order flow. And that's how, we don't really have a bias. Oh, look at this. It's going to bust out again. Most likely. Now, oil loves to do that. It'll come up here and tease, and then it'll just go phew, and just shoot up into 57. I won't necessarily try to trade that, but it looks like it's going to happen. Now, if you're going to get your up thrust here, Sommer, you'll see it real clearly. This level will get tested and it won't penetrate it. So that's what you're looking for now. And if it does break out in a spring, it'll blow right through there on high volume. So let's see which we get. I'm going to guess it's a spring and we're going to go north. That's just a guess. I'm not trading it. And, and anywhere off of this node down here would be considered a spring at this point. Let's see if it can build another consolidation right here, which is what I think it's doing. And it's got to get through this one. So the trade will start right about here if it really goes, and probably end up here somewhere. If you're just joining us, I haven't done the session yet. I'm just talking about oil because we were here. And here we go. All right, let's see if these guys can push it. Remember, this is the oil tape down here. I don't run the blocks there. I just run one tape because there's enough that I can see everything I need to see there. And this right here is the meters for oil. This is showing me a minute. This is showing me 4 minutes or 5 minutes. And the bias is definitely long. You can see the bar by bar activity. It's long, but there's some sellers here. Ooh, look at that one. Yeah, if this does break out, it's going to do it very aggressively because all those guys that sold here are going to have to cover. Here we go. You want to get long, guys?
Order filled. Order pending.
Okay, there's our trade. And just so I can end this trade and stop talking about it and go to the opening, I'm just going to scalp out of it if I can here. But that's the idea. Oh, God, it tagged me and I didn't fill. I'm 7th in line out of 62. Let's see if I get it on the next pulse. No, see, that's the danger of using a target right there. I think this one will still fill. It still has pretty good energy. And this is where I would totally reset it so I can see the total energy. And, we're not taking a lot of risk here. 30 bucks, 40 bucks. Yeah, let's get out of that. So there's a really good example of a trade that made money and we still lost on it. And I'm glad you saw that because that's why you can't use a target and that's why you really need to be discretionary. And this will probably blow through it again and continue. And I'm not trying to trade this. I'm just trying to show you that. The bias here is definitely long. All right, let's go do our opening. Well, let me stop for a second. Are there any questions about that oil stuff before I go into the opening setup for the equities, which is why we're really here for this? That was just a fun little thing to watch. By the way, that's how you keep your losses as minimal as I do. I'm still right with the idea here, but that execution was no good. Again, I just really did as a demonstration. And also, I'm not paying attention. I'm not really doing this. This is still a really strong bias. What I would have done if I was really playing that with my own money and not teaching it is I probably would have added to it. And, maybe market it out instead of using that target up there, but who knows? Okay. No other questions I see in the chat. All right, let's talk about the open. So right now in my arena, it is 6:08. And we're in the middle of this silly daylight savings time changeover thing. So yeah, the times to the other markets aren't as tight as they are. Europe and the impact of Europe on the United States is going to be a little less than it usually might be. So what I do is the first thing I do is I go over here and I grab my range for the ES, and it's telling me nothing. We have a really strong uptrend at all-time highs. So normally this is a lot more valuable looking at the Renko and the ranges. Today it's useless because the bias is up and there's no reason to look at any support levels, quote unquote. So with that in mind, let's just get and look at the action. Okay, for those of you new to my displays, this is the NASDAQ, this is the futures for the Russell, the RTY, this is the YM. I don't trade those very much, so I just kind of put them in the middle to give me an idea if everything is moving at once. This is the ES. I trade the NQ or the ES, and I make a decision which based on volatility. If it's moving a lot, I will trade the ES because it's just easier to manage than the NQ. Sometimes I do them both. I see a question. I briefly mentioned the people hitting the bid with sellers. Could I explain that? What I said was that fills at the bid were sellers. And oh gosh, this, all right, hang on one second. Let me get my water and then I'll answer that. Okay, in Furudom and from people misreading even Jigsaw's tutorials on order flow, people seem to think that current trades are market orders only and that orders going by on limits you don't see there. And that is completely 100% wrong. Those are all trades. And there's three ways that a trade can execute. You can execute a market order against a market order. You can execute a market order against a limit on the other side, or a limit order against a market order on the other side. That is the sum total of ways that a trade can happen in the futures market. So my point is that if trades executing at the bid, these guys here, yeah, it might be somebody thinking they're buying, but we interpret that as a sell. Yes, oil is breaking out. Thank you. And like I said, you know, that's the whole point about execution being so critical. Getting the trend right, and so many of you are saying, but I'm watching the trend. Forget the trend. The trend's irrelevant. It's the energy. So, you know, I had that trend right, but I still didn't make money on that one little scalp we did. So executing against that movement is really going to be hard. This will bust out, and it'll probably blow right through this guy here if he's even real. But I don't want to keep talking about oil. So you guys can watch that if you want, but that was for this morning earlier. Okay, so going back over here, do you understand my answer to your question, Kevin? In traditional, you know, reading your platform on Charles Schwab, it would look like somebody bought there. But we are futures traders and we're order flow traders, and our interpretation of trades going by on the bid is that they're sales. Because somebody's selling to that guy and he's on the wrong side of the tape at the moment. You got it. Okay, cool. And you're going to read things that sound like they contradict that. I know the wording in Jigsaw's tutorials makes it sound like a current trade is a market order. But remember that the word market is current trades. Every trade is trading at the market by definition. So this whole, is it a limit order or is a market order, is completely useless. It falls into that nonsense category. Yeah, there's all kinds of data about whether it's trading at the limit or not. It is not useful for you, particularly not right now as a beginning order flow trader. It may be down the road when you write your own algorithms in ADL. Okay. So the other things I am doing at this time of day, I always pop over and check out the VIX. It's just a, you know, 1 minute look at volatility, and right now it's really low, so people are really bullish. People are probably greedy. You know, if you check out that fun little CNN fear and greed, that's kind of a sum of all the different indexes that track that stuff. And I bet it, yeah, it's pretty greedy. That makes complete sense. So this is probably a good time in the back of your mind to be thinking there's a shortcoming somewhere. So that's another way I prep. I just kind of get a sense for the VIX and that sentiment. Once the market gets open, I do have an internals panel here, and we'll take a look at that. A couple of comments about internals. Number one is it's old school. Somebody asked me about that in the workshop. I don't think you can game the markets with it anymore. It used to be that it was a good way to see program trades coming, you know, 15 years ago. Now it just is a filter for sentiment for me. It's like the VIX, you know, if it's really high, then the sentiment's high. If it's not, it's not. But beyond that, that's really all I do with internals. And then the one other thing I do in the morning this time of day is I kind of just get an overall sense of the energy. This is an equivolume chart. I shared the indicators for this. You're welcome to use them. And you can see, you know, these are, the width is the volume. So these big width ones were a big pulse up. And that's a little suspicious. We kind of got yanked up here by that big move. So I'll watch that. And we've already been watching oil and gold. Remember what I said about gold going down into the out of the teens. These things are patterns and they happen all the time. And, you know, don't try to trade them, but use them as guidelines for trading. I was talking about that quite a bit earlier in the morning. Okay, let's see. The last thing I wanted to say about my kind of overall bias today is the absolute perfect 100% best thing you could ask for if you're looking for an overnight flip setup. So here's our high of the morning way up there. You can see the energy that got us up there. That was that push off of 77.5. These are my reminders popping up. That's that program I showed you guys. If you're interested, it's called Free Alarm Clock. I think they have a Windows 10 version. There's a bunch that do that. Anyway, so we consolidated down here. Somebody pushed us out of here, or some group of people did. And now probably consolidating again, going into the open. So I don't like to predict opens, but if I were to just guess what today might look like, I would suggest to you that we will probably go higher, and it might set up a really nice place to get short where it could flip over. The other thing I would say is that could happen tomorrow, and today we could just have a short squeeze. So what else? That's pretty much most of the prep I do. I don't look at the news. I do check the calendar to make sure there's nothing coming up. And the only thing we have is factory orders, which I don't really pay much attention to, and that's not for a while. That'll be after the open. And, you know, I might pop over on Twitter and see if there's any news. News tends to appear on Twitter before anywhere else, but I'm not seeing anything horribly interesting. So, by the way, guys, you'll see me do that. I'm sorry, I have to make one qualification here. I read very fast. I can read this whole thing at once and do that and read all that. I've been speed reading since I was a 5-year-old. I don't know how to read the normal way. So if I sometimes do something like that too quickly, I apologize. You can ask me to go back. I just do that automatically. I can look at a web page and read the whole thing. So, you know, like when I do this and I say, oh yeah, that's what that guy said, you know, it's so TradeStation. Yeah, I wouldn't recommend TradeStation for trading futures these days, guys. I see a little chat about that. I used it years and years ago, and it was okay, particularly when I wrote my own easy language code. I think there's better places to trade futures and to chart now than TradeStation. If I had to pick, I'd use NinjaTrader or maybe Sierra Chart. And I think there's pros and cons to everything, but I'm not going to talk about that. Okay, in learning market profile, using the 30-minute chart, is that old school or market generally still helpful? Okay, are you asking about using a 30-minute opening range? Because that's not a 30-minute chart. Again, language is really important, everybody. So if is your question, David, is your question 30-minute opening range? Is that what you're asking me? Yes or no? No. All right, then please retype your question. Or if you want to, and I don't want to unmute anybody in this session. There's too many of us here. So please rephrase that and I'll try to answer it. Is your question about using a chart with 30-minute bars on it? Is that what you're asking? Yes or no? In the Mind Over Markets book, they use 30-minute. Oh, okay. All right. In any book, you're seeing somebody's ideas that they published about 5 years after they actively used them. So rule number one, when was Mind Over Markets actually written? I believe it was written in around 2000, the first edition. So The most recent one is 2013. The first edition, if I'm not mistaken, was actually around 2001. So yes, of course, that's an antique. Outdated isn't even the right word for that. Okay. So again, that should just be background. But remember what I said about having, a blank slate. That anything you learned in a book like that is just going to be good foundation, nothing else. Okay. But forget, somebody uses a 3-minute bar or a 5-minute bar or a 10-minute bar or a 40-minute bar. Learn what you're looking for, not what the bar interval was on the chart. Yes, foundations. Okay, let's see. Bauer, do you look at overnight? Yes, okay, we're getting to that. That's where we're going because I don't want to get distracted here with 30-minute charts and whatnot. So now I'm looking at the pre-open, and what I'm really interested in is these nodes. And I was doing that a little bit in that 5 o'clock session. We watched this one form right here at 7750, and I was resetting. If you weren't there, watch the recording when I post it later today. We watched somebody big get long there, and at that point, or a bunch of people together, who knows, but at that point, that was kind of when the bias shifted and we started seeing more buying again. It had kind of been paused there for a while. So that was this kind of general consolidation that forms this node. So yeah, I am looking at those nodes. I mean, certainly there's one down here at 72.74, and there's one up here, and we've got a new one forming. So yeah, how would I use that? And that's really what's important. I would say to myself, okay, if the opening we had some selling and it fell back to 70 or 74 and buyers entered, I would probably enter with them. Okay, so that's how I'm using those. I'm using them as not really support levels, but because the bias is up and we have all-time highs and nothing above us, the risk reward at each of those nodes would be relatively low to go ahead and get long. Does that make sense? Am I answering your question, Bar? Yes. Okay. So that's pretty much it. We've got about 9 more minutes till the open. It's high volume nodes. It's the bias, and everything here is long. Nothing tells me I want to short this yet. And so if it does become a flip setup, remember, one of the things I do wrong, one of the errors that Jeff makes when he trades, and that's why this is so prominent in my process, flips tend to take time to develop. They don't happen overnight. Wrong figure of speech. They don't happen instantly. Usually there's a little bit of a thrust up first. So when we get to that setup and we do it in the workshop, we'll talk more about it. But within the context of today, if we're going to see an overnight flip, I want to give it a little bit of time, and I'll watch it develop on the 30-second chart. But I at least want to see it testing this area up here and rolling. I don't want to see it, sitting up here, to take that other trade. So that's kind of gaming the two directions. There's a potential flip short up here. There's a potential long, a few of them, certainly one at the bottom of the value area from overnight, which is 72 to 74 is also a high volume node. Right now the VWAP is 75. That's another one. Then there's some more here between 77, where we saw buying this morning, and 80, call it. And then we've got one kind of forming right here. So that is all the high volume, low volume interest areas. Anytime you have, an area like this with very little in the middle, just expect it to move through there quickly. So if we're going down, it's probably going to go through there, and if we're going up, it's probably going to go through there. Other than that, I'm not going to pay much attention to the low volume nodes. Up here I will, because that becomes more important, but in the middle, no. Okay, if you have questions, now's the time to ask them. We have 8 minutes till the open. I'm going to take a step. You hope this isn't off topic when you say watch the behavior, you're looking for what is doing an inflection point. Yes, that's exactly what I'm doing. That's not off topic. That is exactly the right thing. That's what I'm doing. Are Mondays slow in general? Ooh, that's one of the Jeffisms that I say. I've got like this book of things I remember. You'll see me post this every now and then. You'll see me post this in the group. Sorry, I'm not looking where I'm. There are many traders that don't even trade. No, it's not necessarily slow, Anton. It just can be weird. So, the Ides, remember the Ides of March from Caesar? Beware the Ides of Monday. Monday can stab you in the back. Okay, go ahead and type questions now. I'm going to go get some water and more coffee and take a bathroom break so that I can have full attention for the actual open. Remember what I said here about this breaking out, guys? Well, it just did. And it's about to break its ledge. So, and remember, but we lost money on that trade. But we were on the right side and we understood the trade. And $50 is nonsense when you're making $5,000 or $10,000 a day. So, but instead, go back and look what I was thinking there. And why did I just say, no, this isn't working, I'm going to get flat? I know it would have worked. I know I could have added to it. But that's not what a scalp is. The opportunity that I tried to grab, I was late. And, and I said I probably was late. So that's the point over there. All right, I'll be right back. All righty, guys, I'm back and we still have a couple of minutes. So, all right. Why would price reverse at a low volume area unless it's the bottom of a range? You understand those are two different things. Tudhar? This is a low volume area that's meaningless. This is a low volume area that's very, very important. Got it? Okay. Be back in a second. Okay, I am back. We are 2 minutes to opening. And because of the sessions I use, you're going to see all of my volume profiles reset as soon as we open, because I run 2 different sessions of volume profiles. I think you guys know that by now. One is all the Globex stuff, and one's just RTH. Okay, and I have so here, we're about to open. I have no bias. I am thinking long here, whoops, long. I'm thinking long here, here, or here. And I am thinking short up here if it actually rolls over. Otherwise, there's just no reason to try to short this. And other than that, I'm doing nothing. Any questions? It's that simple. Forget looking at charts for support and resistance and going back, looking at the 4-hour chart for the last 6 months and all that nonsense. That used to be valuable, and that's why people get misled by it, guys. It's not valuable anymore simply because there's too many factors. We don't know what was going on that day in geopolitics or in the economy or in, Goldman Sachs's trading portfolio. So you can't do that. It just doesn't mean anything anymore. It just is an area of potential interest. Okay, we're off and running. All right, the NASDAQ usually leads. It's trying to. Somebody's got a big offer there. And oh, he actually bought them. Ooh, ouch. Okay, that hurt. Unless he's a longer term player, in which case he'll be okay when we go. My gut is we're going to go up here. I'm just, I love when I see that. Okay. I infer nothing right now, though. This is a really typical open when we're trading at highs. Lots of churning, lots of big bids and asks going by, and and I reset randomly because this data is just useless. Knowing what's going on here doesn't matter. So I don't see a trade. I don't see a long or a short right now. Remember those nodes we were watching? It's and if you're watching this on the LRCs, let's tell you what, let's bring that one over, and we'll bring over the one for the NASDAQ too, just so you guys can see them. All right, so I want to be able to see my other stuff. Let's just watch the NASDAQ. That'll actually be more intuitive. So there's the NASDAQ's LRCs for this price action. Is this a short? Maybe. But the problem with shorting this kind of energy this early in the day is you can really get hosed. So I would be more interested in waiting to see if it starts to roll over. So let's do that. So this is the 30-second for the ES, and this is the 10 tick for the NASDAQ. So if this continues down like that, this is a really good short. Might be. I don't know. My gut is still that they're going to be another pop here, but I tend to trade light on Mondays because of that Ides of Monday thing, guys. So, and I'm going to do this. I'm just going to do stream of consciousness. I'll tell you what I'm thinking. Right now, I don't see a really good bias either way. Both directions seem really risky to me, but I'm feeling a slightly bit more short here than long. The risk to the upside is not much. So let's see. All right, we're short one here, and this is just a nibble. Remember, I said I do that. And just for the purposes of this trade, let's just make this all ES. So we won't watch the NASDAQ. We'll just watch this. And give me a second to set this on the right account. Okay, so that's the P&L for that little trade right there. So it's starting to work. I'm expecting to see some buyers down here though. So let's just scalp out of it again, just for demonstration purposes, if we even can. If the buyers come in and just overwhelm it now, then I just didn't take my opportunity and I should probably get out of this. So, and I'm not saying you should be long or short here. I'm just demonstrating stuff. Okay, yeah, that's a good reason to get out of that. Yeah, let's go ahead and scalp out of this guy. We're flat again. And that's the way I probe. I mean, the short could still be right here, but it's like sticking your big toe in the water, guys. Gap up. Okay, here we go again. Kavika. The only way you could have any preconceived notion about gaps is from somebody else. Have I ever, in any of my setups anywhere, does the word gap appear? Anybody help me out here? Has Doc ever said anything about trading gaps? Okay, I made my point. 2001, guys. Gaps, yeah, it might mean something, but absent the order flow, it means nothing. Sure, we have a gap up, but no, there are no gap up rules are in effect like some people, the Furus, sell. You got to trade what's happening. Yeah, gap up is bullish, but it's also a great way to catch an overnight flip. So here's where I look at gaps because I don't take much credence in them. If you look at this on a little faster interval, let's see here. There it is. It just displayed it. Hang on, sorry, I took it away too fast. That's my gap indicator right there. I have one that shows me what it is because I traded it 10 years ago. I don't do it anymore because, again, it's Furu salesmanship. It's what people selling trading systems about trading the gap. There is no method to trade the gap that works consistently. It depends on the order flow. And right now we have a total mess of order flow. So there's another one of my reminders. Take a deep breath, reset your brain bias. Let's just leave the tick chart up for now. So you can see what's happening if you look at this, guys. We've got this kind of bias to the upside in a big range. 2 points is not necessarily real big in the ES, but for a gap this size, it's a small range, and so it's indicating tightness. In other words, there's a lot of price discovery going on in here, and everyone pretty much agrees that we shouldn't go below here. I mean, look what happened with that short I took. I mean, it went profitable for a few ticks, and I didn't even have time to get out of it before the buyers brought it back up to parity, and I took a 1 or 2 tick loss. So the point is that it's saying price discovery here has yet to decide which way we want to go, so you shouldn't either. Now, if you combine this with the 30-second view, you'll get a little bit better idea of the sense of the overall direction. Look at all that selling going on, but notice it has not impacted price. That is what the video from Axie is about that's posted in the workshop Slack. And the point is, just because you have a negative delta doesn't mean we're gonna go down. It just means that people are selling and it's not impacting the price. Do you get that? That's really important. Everybody who doesn't understand that, ask me in the chat window because that's a really key point. Understanding that a negative delta only means something if it's actually affecting the price and vice versa. So this could be a lot of people getting short and ultimately they'll be right, or it could be a whole lot of shorts to get squeezed if we break back out. You can't really determine what you want to do yet based on the delta behavior. All you can do is understand that it's a tug of war. That's literally what's happening here. And this is the best price discovery example I could have had for a day like this. There literally is no bias in here, and the algorithms are just working this 79.75 to 82.75 range. Putting 25 on, taking 25 off, and that's what's going on here. So as little creatures trying to swim with the sharks here and get the leftovers, this is a really good environment to stay out of. You just won't have an edge with all this volume happening. My gut again here is that this is going to turn into a short at some point today, but because it's Monday, that could actually happen tomorrow if today is kind of consolidating up here and we don't really go down or do much. So so that's it at 6:37. So 10 minutes into the open, that's where my brain's at. So now we have our 5-minute range has set up. You can see that on the 30-second chart. That's the top of it. That's the bottom of it. Today, it's not real useful. Can anybody tell me why? Answer this is a quiz question. You definitely get points if you answer these correctly. Why is an opening 5-minute range that we're smack dab in the middle of not very useful? Not wide enough. That's certainly one reason. Wider is opportunity, narrower is not. Middle of the range. Okay, ranged for, yeah, Kuiken said exactly. I just said it. We're in the middle of the range and it's a tiny little range. So, just a logic point of view, it's not very informative. It means basically everyone's agreeing right now. Bingo, who said that? Trader PD, no sign where to go. Yeah, stay out of the middle. Greg is absolutely right. There is literally no trade here. So, all the Furus are over there like, oh my God, short of the century. And, that's what's going on Twitter right now. And, you know what? I fall into we'll just watch those guys get hosed both directions. That's literally what's going to happen. There is no obvious asymmetric trade. Yes, Maria, you're absolutely right. No asymmetry. There is perfect symmetry is the problem. It's exactly the opposite. This is almost as good a volume profile as you get. Notice how we have exactly the same thing in the YM, which is typical. The RTY likes to spread out a little bit more. It's kind of like the ES, only elongated, typically. You can quote me on that. And then the NQ, look at that. That's unusual. The NQ is also building a range. So, boy, I'll tell you what, if we leave these ranges to the downside, this is going to be a really nice short. 79.5 is a ledge. Yeah, it's a ledge, but it's really more of an edge than a ledge, Kawika. Why? Because of this, see, that range is actually the bottom of the overnight is really where you would find that ledge, not here. More of an edge than a ledge right now. This is an edge, this is an edge. All the bumps, sides of the bumps are edges. So, and by the way, the setup right now would be a range trade. The trouble is, playing it both ways would be really risky. Fading here and buying here would be really the only way to try to do this now. I don't know, I'm curious if Lee's here. Lee, if you were here, would you try your middle out approach today? I would be willing to guess you would not because there's really no middle and no range. I don't know if you're here, comment on that please in the chat, or I can unmute you maybe. You would what? Kawika, I just see I would. Middle out, okay. I wouldn't agree with you. Not today. Why? We don't have a middle yet. We don't know where the middle is. Okay. Thank you, Lee. Yeah, see, Lee and I are on the same page. Not yet. I do the inside out based on TPO. So you're waiting for the first TPO to form. Okay, that makes total sense. And that was the way I was answering Kawika. Yeah, Kavika, like a V, I know. I'll get it. So this is a really boring open. Usually there's more stuff to do than this, but we'll have to do this again when it's the middle of the week and it's a little choppier. I mean, there's literally nothing to trade here, guys. I mean, once we get, oh gosh, there's a little bit of momentum in the NQ. I mean, if I was really in a bored mood, I might be scalping this up here, but there's so little energy that the odds of getting on the wrong side of the trade would be really high. So that would be really a boredom trade, which I encourage you not to do boredom trades. Sometimes, in my kind of lottery ticket account, I'll just play one lots for fun stuff like that. Oh, this is interesting here. Okay, see now if we were at the top of RTY as well, so like if we were up here, because we are at YM, then I would be interested in long here. But because RTY is not playing, I'm suspicious. It tends to play on days that are going to be really long, strong trend days. Now that doesn't mean it won't catch up with us, it might. And it's always a good idea to go out and look at the 5-minute picture here and see, okay, see the RTY is a lot weaker. And that could be the cracks in this little rally. And that, if you start seeing NQ not getting anywhere, that would be a decent time to try the short over here. God, you know what? If you guys weren't watching, I might do it right here. I might start nibbling short. I'm really tempted, but I'm also thinking that could be a trap, and then you'll watch me get stopped out, which wouldn't be a bad thing. I try to give you examples of good trading behavior, and that's not a particularly good one. It's just a hunch I have to get short here. It's a little early for me to get into the overnight flip trade. Now is about when I start thinking about it, but these are the two fast charts here, guys. Let's see. Let's cover oil up for, I think that'll almost work. What about if we do that? You guys can see them both. What's all that matters is what's going on right at the edge anyway. So yeah, that's useful. And then we can still see the indexes, kinda. Yeah, that'll work. All right. All right, I'm going to pause while this is boring and doing nothing. I'm still looking at this as a short right now. Tempted to grab it, but the risk is too high that it's going to go the other way and still be a good trade. I mean, I don't like the entry point, although it's starting to get a little momentum, so I might join it. Please type questions. It's awful quiet here, guys. I know you're just watching and listening to me, but now see now this means we're testing the low of the session. That's why it's all getting red. But my bias there is going to be to see the buyers coming back in. I wouldn't necessarily get long here because there's not a lot of energy, but I do want to see what the buyers come in there if we have any hope of it breaking out and getting a trade up here. And if they just come in at the very low and then they stop buying as we approach the middle, you know, that's the kind of Jeff idea. And then the Lee idea is later in the day going the other way, and those both work. I wouldn't recommend one above the other. Right now, I wouldn't do either really unless I was, you know, the thing about having a really big account, one of the fun things is you can play one lots and the impact to your life is not significant. So, you know, a lot of times if you guys weren't watching and we weren't recording this and I wasn't trying to teach, I might have been going in and out as I was talking with one or two at a time. And a lot of times I make really good little 2-tick, 3-tick profits doing that. I don't really want to demonstrate that this morning because I really want to see if we can get a flip or if we can get a thrust up here that's a true Wyckoff up thrust that reverses, that we can get short. I really am not seeing a good long setup here. For this to be a long, I'd have to see it blow through here just on overwhelming volume. I mean, and 300,000 is so low that, you know, I just don't see any energy here. It's going to probably be a slow breakdown short, which are hard to trade. So anyway. Okay, not necessarily, Jidhar. Maybe, you know, you could already be in this. If it was me, I'd probably already be in this short nibbling, but it's not a foregone conclusion that this is going down yet. You know, don't forget to watch the 30-second chart because you're going to see the collection of activity. And the energy of this is filling this low volume node. I don't feel like the energy of this at the moment is collapse of this index. It just isn't. The selling is not demonstrating that. There's a lot of one lot selling. These guys are not telegraphing that they're just going to dump here. They might, but that's not what I'm reading. Yeah, you could do that. You could do that, Trader PD. A lot of you guys overthink your trades. I noticed that when you write your comments. You know, sometimes it's as simple as just going with the flow back and forth. Like right now, looking at this tape behavior, right? How there's no way I would be short here. It looks like there's too much interest. And until I see it break down and get through 78, I think a short's just too risky. And here's why. You know, if you're thinking short, what's your stop? You know, are you going to stop out up here 3 points away? Are you going to stop out if it gets back into this high volume area? So that's my question for anybody that's a dyed in the wool short here. You know, what's your exit? What's your I'm wrong? I don't know where you put it. And since there's not a logical place to put it, I think it's too dangerous to be short. Unless you know, like when I said I'd be thinking about nibbling short up here. Yeah, that would make more sense because I'd already have profit and I could kind of let it go. Here, gosh, I mean, even an algorithm could pop this back up to 80.75 and just ruin your entry. So would I go short on the 5-minute line as an edge? You mean right here, the 5-minute, let's try to use the right terms. The term for the thing you're asking me is the Open5 low. That is the name of it, the Open5 low. Yes, and it's also the POC. Yeah, I don't really care about POCs. I think I made that clear in most sessions because the difference in the POC right now and, you know, these other two levels is just a couple hundred contracts. So it's not that, by the way, that's why you don't want to go short, is it's going to gradually make you wrong. So no, I wouldn't necessarily reshort this now. The only reason I would have reshorted the bottom of the Open5 low, to answer your question, is if we were actually moving down. We're not. You get it? Forget the 700 contracts in the book. You mean this up here? Or what are you saying? Open5 high has 700 contracts in the book. Oh, I see what you're saying. Okay, you're talking about right up there. Yes, that is totally true. And look at this. There's someone sitting up there. We don't know if that's real, but we know there's a lot of people thinking the same thing, and it's the right thing to be thinking. So I hope I answered your question, David. And yes, thanks for clarifying that, Lee. Okay, so you can kind of see the really fast tick charts are showing that we got that reversal in momentum, but we're talking about a point here, guys. The entire range is only 2 and 3 points. Even a world-class scalper would have trouble pulling money out of this now. Now, later on, when it's churning up here, that's what I was talking about, where you can scalp a tape like that all day long. But you can't scalp a tape like this because it just literally is churning in such a tight range. And when it does leave that range, it does it in a couple of 3-tick bursts, and then it settles right back down again. The only answer to this particular trading setup is not sure, or consolidation equals sit on hands. That's the default. So we've kind of got this idea there might be a flip brewing. We know what the profile structure is. We've talked about some extreme boundary prices we like, long and short. If you don't remember, we were talking about short anywhere up in here. We were talking about longs down here all the way down to down here because of the overnight. So that's that piece of it. So now, what's the delta? Well, the delta's been running negative all morning, and price hasn't really been going any one direction or the other. So that's worth watching. So now I'm down here. This is consolidation. It's just not worth taking the risk. So exactly, Darren. This is when Jeff says, as active as I am, 200-300 trades a day, this is a really good opportunity to go back to bed. It is. And if I wasn't talking to you guys, I might consider doing that. That doesn't mean it won't set up later in the day as a good trade. It doesn't mean anything other than what it means, which is there's nothing to see here. Let's put this back and look at the 30-second and the 30-second. 1 second. I'm dragging windows around. Okay, so here's the two of those. And you can see there's a little bit better bias in the NASDAQ because it's trading above the overnight and above its consolidation, whereas the ES is almost right on it. I mean, that's the high volume node and we're nailing it. So there's literally nothing to see here, guys. So for those of you that have lives, where you do something else, you have a job, you've got your kids, this is a really good time to do what Lee said and just, walk away. Come back, in an hour and see if it looks any different. And given that we're going about 20 minutes and I've got all these huge recordings, I don't want you guys just to hear me say the same thing over and over again for 20 more minutes. So I'm going to just take questions. And if there aren't any other really good things to talk about, I'm going to wrap it up here. That was a really good example of how to evaluate an open and whether to trade it or not. And also to understand the difference between when you're a 1-lot trader and when you're a 20-lot trader. I said a few times where if I wasn't doing this, I would have, nibbled or whatnot. That could have made this a really, profitable couple $100 morning. But again, within the context of what I do, that really doesn't matter. So that's why, it's easy to nibble and not worry about it. Two couple of tick losses is meaningless. I might quit for the day and that'll be, a typical bad day for me, losing $100. So if you're doing a combine, and several of you are, that, you should be doing the 150K and trading it the way you're watching me trade it. Therefore, you'll never get anywhere near your daily loss limits or your risk limits. And then when you get it right, you'll make $1,000 and, you need 10 of those to pass the combine and that's it. That's how you do it, guys. None of this, this stuff where I got to get through it in 10 days, that's not how you do it. Do I ever use gold as an inverse indicator? I do that when everything is really moving, Jason. So a good example of that, one of the recordings, like FOMC, I was talking about that. So go back and look at that recording. And also, on that one, I mentioned it, I think specifically, if all of the indexes are going down and gold's going up, a lot of times I'll look at that. I might look at why there's if geopolitics are influencing that. I might look at gold in the same framework, but I don't trade off of that, no. I only look at that as as kind of another one of those filters. Like, I said, I look at the VIX, that's another one. Like, for example, if it was today and all of a sudden the VIX shot up to 17 or even 14, that would help my hypothesis that today is a short, but it wouldn't necessarily be, let's get short. Do you understand the difference? Does that make sense, Jason? Those are what I call filters, by the way. They're things in my head, but not necessarily anything I would use as a signal. You won't see them in my process. By the way, they used to be in my process when my process was much more mechanical, and it had all kinds of trends and setups and deltas, and this is literally a program I wrote that tests every one of my setups, and that's how I got here, guys. And so when Darren said, and Darren is a really good guy to listen to, by the way. Darren has a very good critical thinking mind. He basically, and he said this over here in the Slack, I think he said it here. Where did you say that? Do you remember, Darren, where you said that? I know there's a way to search quick, but I don't remember where it is right now. Anyway, if somebody can tell me, it's an Open5. Yeah, that's where I thought it was too. Anyway, Darren kind of consolidated what I said, and let's see, it wasn't there. I'll go back and find it when I'm not talking. But anyway, he basically summarized, here it is for Open5 dynamics. Anyway, go through and read this stuff, and you'll get an idea what I meant. But basically, you're going through and you're just kind of getting a sense of what's going on, and build a framework in your head. And each one of the setups is just a real low risk reward, really visible way to do this. And right now, we're testing the lows of all the ranges. So if the market was going to break down, this is where you'd expect it to happen. And particularly, I would be looking for the NASDAQ and the RTY to break to new lows first. If that happens, I would probably jump in short here. And I think we might actually see that right now. So, yeah, but see, there's buyers again, and that's why I'm not excited about that. And it's Monday, and this range is real tight. So anyway, keep an eye on that during the day, guys, and that might become useful. Okay, yes, number one rule, don't lose money. That is true. 3 rules. No, gosh, watching this tape, look at that. 300 on the sell side, but again, that could be a guy exiting, along or running a hedge. You can't infer that necessarily is going to impact our tape. And one of the really important points about today is notice the cumulative delta and price are not necessarily completely in sync. And that is also telling. Okay, are there any other questions? Let's see, David, market is accepting these highs. The way I would word that is that buyers are no longer buying here, but they're buying any attempt to leave here. And any attempt to leave here on the north is getting buyers taking profits and or sellers. So I don't know that I would say that the market's accepting these highs more than I would say that we temporarily have balance. I don't know if I would go so far as to say the market's accepting these highs yet. That's more like what Lee was talking about you need to give it some time and let the TPO chart develop. If we're still up here at an hour before the close, then that's probably a valid assumption. Do you see the difference between what I'm saying and what you're saying, though? I'm putting it in context and you're not, and that's the difference between me at 59 trading for 40 years and you at 20 trading for 2 years. So imagine what you'll be able to do when you're my age, right? Okay. Yeah, it is a test of patience, but you know why, Dr. Shaw? Because you already decided what you're going to do. You're up here saying, gosh, I needed to do one or the other. You could set an alert up here and an alert down here and go do something else. That would be the right way to do it. What are you saying? Okay, yeah, no, but I'm trying. Okay, you have a habit of taking it personally when I contradict you. So I'm going to suggest that what I'm doing is I'm trying to fine tune you. For example, this is not a rule of success of mine. It's a rule of trading. I don't like the, success, that's too Tony Robbins for me. And I understand you're in that business, so I'm not criticizing you. Understand, I'm saying I want you guys to use my terminology here. You're learning what I do, and then you can go back and use your own words for it when you teach someone else, okay? So with that, this is not a test of patience. It's a test of waiting until the order flow says something different. Do you understand? It's a subtle difference, but it's important. I want you to understand what I think, not what Dr. Shaw thinks. Okay, I did mention those. I did, but I don't want anyone using the word success. Okay, I want you to use less emotional terminology, please. Yes, I'm using my words, yes. But it's not so much a test of patience as it is waiting for an appropriate setup to appear. We could be up here consolidating between now and Thursday. So yeah, it's about being patient, but it's also about just using your process. And now I'm gonna go back to that because that's how this conversation started. Everything that I do is in here. So, you know, that comment about gaps, yeah, it's in here, wait, slow, small. But again, those are filters. Those are filters. Yes, perfect word, building a business case, Lee. That's, Dr. Shaw, that's a really good good terminology. One of the things that a lot of people, I get really sensitive to the terms the Furu use, get rich quick, you know, big money, smart money, big buyers. So I will shut down that terminology here. And that's, I want you guys to think like business people, not like success and failure. Like, you know, a business doesn't succeed or fail on one trade. It succeeds and fails on consistency, and that's about process. I really, you know, I'll be real honest. I'm not a fan of, you know, success technology trainers like Tony Robbins. And I've run into him in a few different events and whatnot, and I know that's really valuable for some people. I also think it's just really misleading, you know. So I'll leave that there. Okay. Nothing personal, Dr. Shaw. I'm not commenting to you. This is to the entire group. I want everybody to use the terminology that I'm using while they're in chat, and I want everybody to have the mentality I'm trying to teach you. How you adapt that to your own trading is your personal business, and that's what you should do. Okay, this is a good example of my little reminder program. I'll bring that back up so we can actually read it. It's this one right here. What are gold and oil doing now? Since I put that there because I often forget to look. I mean, we're over here focused on the indexes, and there could be a good trade setting up over here. There isn't. I mean, they're doing exactly the same thing, and that's really rare, but look at that. You've got a really beautiful profile building. So I would be interested at the edges in all those cases. Okay, more questions or we're going to wrap this up. It's awful quiet. That's that again. There's our short, boy, but this would be such a hard trade to stay in. Oh yeah, okay, thank you, Eric. Yeah, we had that factory order number popped out. Wow, that is quite a difference. So let's see how the market reacts to that. That could be the catalyst that makes this a short, or it could just be a good place for the buyers to take advantage of the people that think that. Notice what I just said. So you want to see this thrusting down. You want to see the RTY going with it. So far, you know, we're not seeing a lot of energy to sell this, so don't get too far ahead of yourself. Look what's going on over here in the, oh, damn it. I lost my mouse. Where are you, mouse? There you are. Okay. Look what's going on here. It's not necessarily a reversal pattern, but it's certainly slowing down of the downside momentum. Yeah, see, the danger of being short here is that everything is now priced in and we just roll right back up into this range. That's why, you know, today the signals are just not very clear. The other thing is, I'll share this with you guys, and I think from a coaching and kind of last time I'll use the word, but success kind of point of view and how to adopt my thinking and methodology. Very often on Mondays, guys, I will not do much because I just haven't been trading for 2 days and my skills aren't as sharp. So that's a really good parameter to roll into that thinking, Dr. Shaw and everybody else, is, is your mind as sharp for that success mentality? Mine never is. So I always question even my own assumptions. And all right, now this is significant. So now we have a high volume node and we're not in it anymore. So now you can see the people that are trying to sell right here. That's why they're doing that. They're looking at the bottom of the value area and they're thinking that's a reasonable place to get short. And I agree with them. So I wouldn't necessarily stick an order there. That would look like that. I wouldn't do that. I'd be more interested in doing this, which is fading the other end of that range, than I would necessarily where these guys are. I could see how these guys, unless they're really big players, could get stopped out in here about the spot that I want to get in. I certainly wouldn't be shorting down here. It just, and the reason's really clear. Even though we're pushing down, we just don't have any energy or momentum. If that changes, different ball game. Okay, other questions? Boy, for considering how many of you there are here, I'm not getting very many questions. Are there times where order flow is just too fast to trade? Yes. Right after the FOMC was a good example. That's why Top Step has their 1 minute rules. And that's a good idea for rookies. Yeah, it's possible to trade that stuff. I do it sometimes, but but you're trading a one lot in a $500,000 account. You're not trading a one lot in a $50,000 account. Then you can afford to take that kind of lottery risk. Okay, from Kawika, Jeff, I may have missed it, but do you only trade after the first 5 open? No, I trade anytime 24/7. It's just today, we're not getting a lot of clear information. That's what I mean, okay? Would you long scalp from here? Maybe. I mean, I would have tried it down here before I tried up here where we are now, since, we're getting this kind of reversal behavior now on the fast LRC. But, I'll tell you what, guys, I don't want to blab all day, and that's what I'll end up doing. But my decision today would be to do nothing. I have plenty of things to do. I would probably just set some alarms and have them, alerts, and have them go to my phone if we get here or here, and call it a day. That's what I would do to answer your question. There's just nothing here. It's one of the things that a lot of new traders do, and I think Dr. Shaw, you echoed me on that a minute ago, or somebody did, that learning when not to trade. For all of you, that's really important. When the market's just not giving you good opportunities and giving you asymmetric setups, then why take risk? Why have money at risk? So that's kind of, look at the intraday thinking. Delta and price impact, inconclusive. Collecting info, inconclusive. Definitely consolidation. We have a gap. We don't have volatility. Would I enter this now? No, it's risky. It's hard to figure out. Do I need to improvise? No, that's a kind of, thinking outside the box. And, could I make money at scalping this hourly? It would be really hard. So I'm kind of at the conclusion that I'm just going to watch, And remember this other graphic? Hang on one second. I posted that matrix. I think I posted it in here. This thing, yeah. Oh, that's the other one. This is mine. There's a lot of these out there. This is just one I kind of modified. Today is low volume and it's low range. So, we're kind of in this. Holidays pre-news, choppy, fade at the extensions, and flip the overnight. There's really no other tactics in this particular situation that are going to work. Do you understand that? When I use that word tactics? You might, if there's a really big distinction between the word strategy and the word tactics, and I encourage you all to actually, Google that. And I really do mean the military sense of those words, like, what's his name? Sun Tzu, the art of war. I mean in that sense. You really want to think in terms of strategy and tactics. So what I mean by that, strategy is always the bigger picture. So our strategy today is fading this because it just doesn't have any energy one way or the other, absent that changing. Our tactics to do that are going to be, you know, buy this high volume node, sell the top of this range, and other than that, absent sudden momentum entering the market or these two lows breaking down, we're going to sit on our hands. So I just outlined kind of what I'm going to do today. Notice how I didn't do that before the open. You'll hear another thing, a lot of furus. Look at the buyers coming in. A lot of furus will post their pre-opening trade plan. Again, in 2003, guys, I did that and it was really a good idea. In this day and age, all it will do is preconceive you to have a bias one way or the other. So I encourage you not to do that. You know, don't come in with a preconceived notion. Do your homework, understand, you know, the technical picture. You know, that means this. Understand this technical picture. Understand where you might be interested, and then, you know, if you don't get any high opportunity setups, sit it out. When in doubt, sit her on out. That's how they say it in Alabama. Okay, love the workshop. Thank you. I appreciate that. I hope this has been helpful for a lot of you. The only negative comments I've gotten are from one or two people, and they're about being too much of a hard ass on you guys in the chats, and I will continue to do that. Because some of you are successful business people in other arenas, and you just haven't understood me yet, and hopefully you will soon when I say you really need to be a tabula rasa. It's all over the place in here. I posted it over and over again, that term, and this idea of you have some knowledge, you need to learn to put it together in experience, and then you will get to the point where you can create it and make music or make money or make whatever thing you want to make with it. But don't confuse yourselves that, you know, literally with one exception, there is nobody here that is qualified to even have this conversation with me. And some of you are still trying to do that. So, you know, good. Yeah, for you it is, David. That's why I love you. You're like our 20-year-old perfect laboratory for how to become a successful entrepreneur. And my hat is off to you. It really is. Oh, it's the hardest thing. Look, I'm 59. I've been a principal in 26 startups. That means either it was my money or I was the CEO or a C-level executive or I was on the board. I've done that 26 times. And this is still the hardest thing I've ever done. So my hat is so off to you guys. And Maria, you know, with 2 kids at home, you know, learning this on the side. I mean, I have nothing but respect for all of your situations. But I really need you guys that are, you know, thinking you have something to contribute back to me in this. Don't do that in these webinar sessions. Please, it just, you know, whether you do or not, I'm just going to say no. You know, you're here to learn from me. If you teach me something, and some of you are, you know, Lee, certainly, many of you guys are, that's great. But, you know, don't talk, you know, well, this is the way I do it while I'm doing a session. I don't care how you do it, and neither does anybody else. Okay, I'm emphasizing that, and I'm being a little nasty to make a point. Okay, any other final questions, comments? This is going to be, wow, another hour and change. Great, okay, thank you, Sam. Yeah, that's a little bit my Sarge. I can be a little bit of a drill sergeant, Kavika. You know what? I need to do that with guys like you. Some of you are just, you know, your egos are just too big. And, you know, you're talking to a guy who has a really friggin' big ego. So for me to say that, you know, you have to understand how dangerous that is. There is nobody among the 50 of you that knows anything. I will make a blanket statement, and I'm one of the 50. So, you know, you just have to really come in as a blank slate. Check your ego at the door. Check your Tony Robbins at the door. Get in here and just learn how to play this game. Okay, that will be the end of the session. Thank you, Lee. I will talk to you all in Slack, and I will post both of the recordings from this morning there.